I think he credited Darcy a lot because when the organization was sold to KKR a few years ago now, he became quite wealthy. And this fellow, again, who I met and took him to a basketball game a month or so ago, he really enjoyed it. But he owns a castle in Belgium. And I'm not saying Darcy's the only reason for him owning the castle, but it certainly would be one of the reasons. So please welcome Darcy Lalonde, the Managing Director of Safelberg, involved heavily in Philippines in the BPO industry these days and the tourism industry and other sectors looking to become more involved with. Darcy Lalonde, please. Okay, good.
All right, good afternoon, everybody. I'm going to speak a lot louder than everybody else, if that's okay, because that's normally the way it works. So as Richard mentioned, I was just speaking to somebody at the back. They said, we would never work with you. You have a castle. But we'll show you the castle and a little bit of history behind that. So it's, again, an interesting topic, I believe, today. I've been on both sides. I've been bought, been sold, been doubled over by the biggest, the baddest, and the nastiest. So I decided to join the private equity and venture capital world. But I do believe things have changed a lot since the financial crisis. The leveraged buyouts are certainly a thing of the past in many respects, and much of the reason why we have a lot of pent-up demand. But I'll take you through a little bit what I like to call the entrepreneurial outlook of the Philippines. I take some pride in being an entrepreneur, and it's a great situation when you can actually use private equity and venture capital to drive entrepreneurialism. And I think in today's world, the key, and that's in Safelberg, is we don't want those strong managers, those great ideas guys, those entrepreneurs to leave the business. We want to keep them in the business. And I think it's, again, a little bit of a different philosophy. And I guess I look at it more as the Warren Buffett way, which is building businesses, being passionate about businesses, as opposed to, and no discredit to my good friends at KKR, but I've been bought over by KKR, and that's a very different mindset. It's all about the wealth of KKR and not so much the businesses. But hopefully they won't sue me for that because they're a lot bigger than I am. So let's take a trip through. I'm not Belgian. I just want to point that out because I am a quarter Belgian, which I guess got me to be friends with Jos Slice. I was going to have Thibaut here today, so he was Belgian, so he looks more European, much more handsome than I am. Unfortunately, we have a client that he needed to meet, so I will take the ball today. But if anybody wants to drill down on ratio statistics to the nth degree, you can go meet him and he'll speak to you for like 7 hours, okay, and he'll put you to sleep on that. Okay, next slide. So Safelberg Investments. Oh, I'm used to outsourcing these things. Who is Safelberg Investments?
Sorry. Okay. Oh, here it is. Okay.
Okay. All right. I believe in outsourcing. So who is Safelberg Investments? Well, again, I think an interesting history here is Jos and I started a company called Arinzo back in 1999. We became one of the largest HRO providers in the world. So ADP, Arinzo became Northgate Arinzo. And I guess it's a great story in terms of, you see on the third bullet there, which was founded by Jos. And can you imagine getting 18 times earnings when you sell your company? Today, you'll hear me talk about those types of multipliers, and those are not realistic much anymore. Okay, so it was great times. Very brilliant man in terms of when he was able to exit this, and an 18 times multiple. I wish I could do this every day because we would all be living in castles. So this is the actual castle that the office is in Belgium, and again, it's something we're very proud of, which we can have customers go to. When you get wealthy in Europe, eventually, if you get rich enough, you have to buy a castle. Okay. In the Philippines, I decided just to buy a resort with a beach house. Okay, works equally well. In terms of the strategy of Safelberg, Again, we want to work with companies. We look at the companies very carefully in terms of what they provide. And one of the biggest issues that all companies have today, which I'm sure all of you are aware of, is something called working capital. This is where everybody gets into trouble, is working capital. Financial statements, and I learned this from KKR, I can make a financial statement look wonderful, and I can look hugely profitable at any time you want, and all very legal. We just kind of play with the above the line, below the line, side of the line. I'm actually a CPA as well, so it actually even helps me understand that. Okay, so one of the things we're really trying to do with Saffelberg is work with really good, solid companies that have a positive cash flow perspective, and really where their problems are is in terms of growth. They can't keep up to the growth. Okay, and some folks, I also am right now running a company called Shore Solutions, which is an example of what Saffelberg does. Not only do we invest, but we bring in the management team and we bring in the people to make things happen. Active in Europe, very much in Brussels, in Belgium, a little bit in the US. Jos did some brilliant things like buying real estate in Vegas. So not all of his investments are going well, but that one is a little bit flat. But he's managed to still find ways to generate cash out of that as well. And then in Asia, and again, what we're seeing in Europe is very much the multiples and the returns, of internal rate of return are less than 10%. In Asia, and you'll see again some statistics, people were shooting for IRR of say 20%, which is again perhaps unrealistic as well. And that's been some of the delays in terms of getting this money into the market. So we'll talk about a little bit what we're doing in Asia and how we believe the Asian market is going to be exciting. Saffelberg Investments aims to accelerate company growth, create value, provide a better return to entrepreneurs, investors, staff, and other stakeholders. Okay, it's actually a very nice mission statement, but it really is what we believe. So we not only offer capital, but executive coaching, value, expertise, and support in diverse managerial areas. Okay, so this is again very much based on a passion about the business and working with the teams that we look at on the ground. No specific sector focus. If it's a good business, we don't care what it is, we'll look at it. Okay? So as Richard mentioned, we have resorts in the Philippines, we have BPO call centers, we have some real estate, we have all sorts of different things that we play in. If we think we can make money in it, we'll play in it. Okay? Invest in companies with a clear acceleration about to take place. So again, an example with Shore Solutions was a BPO that had about 200 seats. They had about 400 seats on people wanted to expand, but it costs money to add those seats. And it costs a lot of money to add seats. You have to pay staff, you have to fit out offices, you have to pay rent, you have to put 3 months deposit, 3 months security, 3 months, 3 children. It's a lot of money to get things going, okay? And then what happens is you get slow paying customers. And then you're in trouble and you can't make a payroll. Right? So this is what we really clearly look for is those type of companies with good management teams. Again, in terms of being a national or international leader, being innovative, being passionate about the business, and we invest through different mechanisms, through MBOs, management buyouts, but again, typically we want the management to stay in. So an example of Shore was where we did a management buy-in. So I actually, myself, with my small fund, which I run here out of the Philippines, with my limited partner, Saffelberg, who brings in more funds, I basically bought into being a manager at Shore. So I said, not only am I going to give you money, but you get to pay me to be here and to help you build this business. Strategic refocusing. And again, we'll talk about some of the really critical items when you go into these situations is on day one, you need to know what your exit strategy is. It doesn't mean we're being sluttish. It means the end of any evolution is actually to exit, right? And you want to focus on that. All right? Current investment portfolio, as mentioned earlier, $100 million in real estate, with little or no leverage, $70 million in private equity. We have all sorts of different sectors that we're in. And again, in Asia, we have a little bit of stuff in China, and I'll talk about China in a while, because the good news is that the China and Indian private equity world more or less flopped. And the good news is people are realizing that Asia is made up of more than China and India, and Southeast Asia is really becoming that model. Indonesia tends to be the leader in that space right now. So if you talk to most industry analysts, they talk a lot about Indonesia. I'll try to fill in why Indonesia, why not the Philippines, other than Indonesia is a lot bigger country with a lot more resources. Okay. So why do we believe Southeast Asia will continue to be attractive? And I think Asia has been very attractive for investors for a long time, but what we've seen is that money hasn't actually come into the markets. Okay, there's a lot of reasons for that. There's risk. There's some of the macroeconomics of these different countries, and it's all about, again, not having people who perhaps understand the macroeconomics on the ground. And that's where we believe if we invest in companies, we want people involved in the company. Okay? So we hear about it, you see it in the news that investors, private equity, venture capital is flocking to Southeast Asia for good reasons. What are those reasons? Well, there's 10 nations. So really Southeast Asia goes from Myanmar to Singapore. All right? Fast-growing middle class. Certainly the Philippines, we'd like to think is getting a fast-growing middle class, and certainly something that the current government is working hard on. There's a huge opportunity in terms of that middle class. Relatively stable and open economies, and this is one area where I would say the Philippines, certainly has, I believe, a more progressive view on that than sort of countries like Indonesia or Thailand, which tends to have a little bit more flunky stuff that goes on in terms of from one year to the next. Combined gross domestic product is US is 2.3 trillion across these countries. And it currently is the 8th largest economy, and within the next 20 years predicted to be the 4th largest economy. Okay, so again, obviously a high growth, high opportunity market. Attractive alternative to China and India. So again, as I mentioned before, I've been involved with a lot of companies over the years, and everybody's taken a run at China, taken a run at India. The reality is a lot of people took a run and they left their money there, and they came out with empty pockets. These are big countries, with their own national companies, their own money. People didn't pull a lot of money out of India and China. So again, we see that Southeast Asia is becoming really the spot that people are looking for. The result has been increased competition. Okay, so now, and particularly we see in the Philippines, that we can be private equity funds coming in and venture capital, but we also have the big nationals and the big conglomerates to compete with. So there's a lot of very wealthy people in the Philippines and these conglomerate side that can also compete with the private equity guys. Okay, and you see that with the major groups. I won't bring up the names, I'm sure everybody's familiar with them, but they have a very, very dominant role and can play this to their leverage point, and they're from here, right? Okay, so the other issue is that sellers have been seeking high valuations. Okay, so as a private equity guy, I come in, and this bozo tells me he wants 18 times earnings. I'm going to tell him to forget about it. Okay, so this is, again, why have we not seen this money actually hitting the ground through 2012? Those are a lot of mismatched expectations. And then the big nationals. So the influx of PE firms, cash-rich corporate buyers created inflated price multiples. This is particularly evident in Indonesia, which again has been a little bit of the favorite of PE firms. A mismatch of expectations between the two, and there's been a concern about meeting those expectations. So you'll see some charts, and all good private equity people have to have charts. You can see the chart on the left-hand side is bad, because it goes down, right? Everything should always go up. But what you see in that first that first chart, which is really in 2012, there's really a declining deal value of 16%. So in 2012, you see the deals are going down. Pre-2007, these things were 20 billion. Okay? So again, a little bit disappointing that we didn't see the deals. So the deal value dropped 16% to 4.9 billion, and the number of deals in 2012 was only 32 throughout this whole region. So again, pretty disappointing when everybody was talking about all this investment going on, all this money coming into the markets. Okay? So little has changed in terms of that upbeat prediction, because again, we all know that Europe, North America are not growing economies, that Asia is the growing economy. But you know, why is this enthusiasm to get money here? Why is it not hitting the ground, and why do we not see this return to the private equity world? And again, just going back, intense competition, macroeconomic conditions, region-specific challenges. Okay, so things like what's happening in Thailand right now. You know, nobody's going to invest in Thailand right now. The Philippines has been relatively stable over the last periods. Thus, it is attracting more. The current government is certainly internationally friendly. And again, we're seeing more investment coming in. The good news is as we went through 2012 on the right-hand side, and I'll show you a chart again in terms of the private equity portfolios that are sitting, a lot of them are sitting and they haven't been exited. And this is, again, a typical 5 to 7 year horizon that we put on exits. And if things don't exit and you don't get the multiples, my limited partners get upset because they have money. They're willing to give me money. They're willing to give me money for a specific geography, but they want a return. And they want a return in a certain amount of time. And if you don't get that return, they get antsy. And then they start taking their money and they go move it somewhere else. If you don't use it, you lose it. That's basically the way these funds are. You need to get the money in when it's available to do it. Okay? So the good news is, you see on the right-hand side here that, you know, we've had a huge exit increase. So again, some of these pent-up portfolios that they couldn't exit are now starting to exit. And why is that? It's because they've dropped their expectations. They're not going to get 18 times. They're not going to get 9 times. You know, they're probably going to get, well, 3 to 5 times right now. Hopefully we can make that 5 to 7 times. Just in case anybody would like to buy Shore, I think you should give me 18 times. Okay? That's BPO owned by Selfelberg 18 times. That's the way to go. Okay, so that all makes sense, I think. Again, pressure on private equity and building competition for new deals. So again, what we're seeing is a few years ago, we would come in and look at a deal. We'd be the only guys looking at the deal. Now, what we're seeing is you are getting more and more competition. You're getting at least one other private equity player. You get local conglomerates and companies that are tending to compete. And part of the struggle in Asia is that you don't have many multinationals here. So again, you have the PLDTs and whatnot. They want to become multinationals. How do they spread their wings and become multinationals headquartered out of the Philippines? So again, they're not easily to give up those big assets that they have here to then take themselves and become multinational players. So the competition certainly is there. The sluggish returns from 2009 to 2011, you know, made limited partners anxious on the returns. Okay, so again, the expectations of sellers are not matching well. The average age as well, if you look at the right-hand column, 2010 through 11 through 12, you go from 3.6 years average portfolio is now gone to 4.3. So it's starting to get to the end of that spectrum of 5 to 7 years. So what happens is you need to push these out. Who's buying them? I mean, typically right now it seems to be more fund to fund. So you basically have one private equity fund selling to another private equity fund. There's not as much sort of natural evolution of people buying in. Okay, so it's a bit forced, some of these deals. Okay. So Southeast Asia market is expected to grow, again, partly driven by the lower return expectations. So again, as a seller, if we start talking 5 times earnings, it's a little bit more interesting than the 7. Again, on the right-hand chart, and this is a rough idea, 5 years ago, the IRR was roughly expected to be 20% in the Asian markets, which translates to a 7, 8, 9 times multiple, which again, isn't that easy to get. Although in our markets here, we've had a couple of nice examples with Stream, Converge's buying Stream, and SBI. So there were some nice multiples on those deals, and that's again where we saw in 2013, we're seeing some things happen now, okay? And we do feel that that's gonna happen. So 2012, you go from a 20% expectation down to 16. 16% gets you more in the 5 times multiple. So now our expectations are starting to get closer, okay? So again, this is what, you know, really in terms of the market, 2010, 11, and 12 are not fantastic in terms of private equity in these economies. What we're seeing is this pent-up demand in 2013 has started to see some exits happening, and we're starting to see that enthusiasm come back to invest in markets that are very hungry for this money. Okay, so it's you know, and to my friend from BDO, it's not easy to get debt here. It's not easy to get banks to give you millions of dollars unless you have a lot of collateral behind it. So again, this is where private equity comes in and takes a bigger risk. So the key to success, I guess what we believe the key to success in this region is, and you know, we're a relatively small player. We've invested, my fund right now in the Philippines is about 500 million pesos. I always find that sounds a lot more impressive than $10 million. But again, the nice thing about moving into a country like the Philippines is your cost of entry is relatively smaller than if I wanted to start something up in a country like Canada, where I'm from originally. You know, 10 million bucks in Canada, you spend it like that, and even if you make money, the government takes it all anyway, because they tax things. And we have great health care in Canada. Okay, so the winners will be those who raise their game by improving local insights. So again, what we believe is very key is that when you're going into a market, don't listen to what the industry analysts are saying. Don't watch TV thinking you're an expert. You better have people on the ground who understand business in these countries. And I've been in and out of the Philippines for 15 years, and that's why I'm the general partner for Saffoberg. It's about what I know in the Philippines and Singapore and KL and Thailand, which is countries that I've lived in. Increasing proprietary deal flow and assembling the strongest management teams that build the best companies. Okay? So it's not just about the company that you're looking at buying, it's also about having a management team ready to bring in and to coach these teams to bring the returns. Okay? So I like to call it, you have the plan and I got the man. And I'm the man for my limited partner. Because he's the man that has a lot more money than I do. But he always makes sure that as a percentage of wealth, I invest a lot more than he does. And that way he knows I'll be very serious about this, because I'll go bankrupt before he does. And that's the way it's called collateral. So again, we use a lot of, and hopefully there's, I am quoting Bain. Hopefully there's a lot of Bain people here today. But again, some great information about this. The strength of the management team is still the most crucial factor to ensuring deal success and rise above competitors. There's no magic wand to all this stuff. The old days of restructuring deals by just creating leverage, breaking them up, splitting them up, making a bunch of money, we don't believe that's there anymore. And I've lived through it. It's horrible to run a company that is leveraged so that all you do is pay interest. Right? And all the pressure is on you. It's a lot easier to have management equity and you are part of it than it is paying the bank all the money every year. Okay? So part of, I guess, my ecosystem over the last 15 years in Asia is that I do bring in these management teams. So Lani over here is my CFO. She's been with me since she was 12 or 13 years old, and I was 19. So Lani, she does my accounting and finance. One of my new management team is Tanya, who does the sales and marketing. And again, I'm not talking about bringing in foreigners. I'm talking about bringing in people, top quality people here based in the Philippines. We can only afford to pay so many stupid foreigners to live here, okay? The rest need to go home, okay? And I mean that in a nice way, of course. So the days of, and again, relying on the deal's financial structure to extract value from portfolio assets are over, okay? And now again, I honestly believe this because I've really lived it. And I got caught on a couple of sales that happened during that financial crisis when you went from a leveraged buyout into the real world after that. Oh my God, it was not easy because the financial models don't work anymore. And it's not about the business and the passion and the entrepreneurial spirit, it's about financial models. So if I cut 300 people in Singapore, I'll make money. See, look at this. Now, the fact that you're going to lose business and you're going to lose customers, but that the model doesn't actually show you that. That's a feel. That's knowing your business. Okay, so those days are over. So people like myself, the general partners, will need to win favor with limited partners. Okay, so again, for me to bring in more capital, I need to convince that these limited partners that have the bigger money, that I can give them the returns that they expect. Now, the returns need to be reasonable. So again, we talk to what is that reasonable? It's not 18 times, it's not 20% IRR. Okay? So we're getting there in terms of matching those expectations. So identifying groom strong management teams. So again, it's getting very involved, extensive involvement post-acquisition. So one of the things when we came in with Shore, we very much worked with the existing entrepreneurs. Great guys, also a cultural fit, which is also important. And we sit down very quickly and come up with a plan. Because most of these guys have just been doing what I call the payroll cycle, which every 2 weeks, oh God, another payroll. Can I pay all my stuff? And of course, guess who doesn't get paid? The owners don't get paid. So they're mortgaging their houses and cars and keeping things going. So it's again to help bring in a management team that really understands this is not what it's about anymore. It's about getting your working capital in order. So again, understanding what is your working capital requirements. Now what we did was a management buy-in with, and our model is very much buy-in and then build. So what we did was is a relatively big acquisition after that. So we went from 200 to 2,000 seats in a year. So now we bought a company called Rainmaker, and some of you folks may be familiar with. Great, a great story, lots of seats, but absolutely a working capital nightmare. So again, you got to be very careful because sometimes paying $1 is not paying $1, it's paying millions of dollars in working capital that they just simply didn't have in their books. And that's why people are selling things sometimes. Okay? So flesh out a concrete value creation plan. So again, this is something that you really need to think about. What is the end state? What are your goals? Setting those targets. And if you don't meet them, very quickly being on top of them. And that, when you find those companies that you initially bought with the entrepreneurs and the guys that are really passionate and love their business, this is one of the things they need help with, right? Because they're excited about outbound, telemarketing campaigns, and they're really great at all that stuff. But this is a different view of business, and you really need to keep a focus on that. Okay, gaining proprietary access to attractive deals. So it's again being part of this ecosystem, so something like Rainmaker, for us was really a key acquisition. It took us, we went from organic, we went 200 to 500 organically, but as you all know, organic growth year on year can become more difficult. Doubling your size from 10 seats to 20 is easy. Doubling from 2,000 to 4,000 is a little more difficult and takes a lot more capital. Okay, so you see, the whole structure of, the important things to look at, the important things to plan, source the best deals, keep working capital and cash in mind, because cash still does matter. Ultimately, business is easy to run when you have cash. When you're short of cash, it's really hard to run business. Okay, then you got to get creative. And again, limited partners then become very important, because if you run short of that working capital, you got to go back to them sometimes and say, oops, I need another $500,000 to tide me over. As long as they're tiding you over because you're growing and you're generating cash, you probably can have that conversation. If you don't, you're probably in a little bit of trouble. And that's where it's not easy to raise capital in the local markets. Work with the management teams, work on the exit strategy while focusing on that value creation. Okay, so a little bit of the philosophy of Suffelberg. Again, Joss and I go back a long way. We've built companies together. We've been on both sides of being acquired and acquiring. And, we firmly believe this is not only a successful formula to bring shareholder value, not just to yourself, but also the company and the managers and the employees, but also an opportunity to do business in a way that we feel creates the passion and the entrepreneurial spirit and the love of doing, good, solid business, which I think that is something that everybody's had to come back to the reality that stock markets and some of these other things aren't necessarily about value, they're about perception. Okay. This is a little bit of the portfolio for Suffelberg. Again, I'll mention Shore Solutions just because I get an opportunity to plug it shamelessly here today. But if anybody needs any context in IT services, professional services, or BPO, you can call us. And then the other shameless plug, of course, is Kahuna Resort and Spa out in La Union, which is your surfing capital of the Philippines. So please come and join us at Kahuna Resort and Spa. So everybody appreciate it. Hopefully gives you a little bit of insight. I like to consider myself a bit of a layman, very pragmatic view in terms of how we do this business. Well, I do have those analytical whiz kids that do spreadsheets that blow your mind. And Thibault, unfortunately, couldn't make it today, but certainly he's here as my right-hand man in terms of building those models and making those things happen. So I appreciate your time, and we'll see you all